To understand price action, traders must at very first understand the market structure. The structure on the chart in front of us is a trend range. I can tell because I can see multiple price swings swinging up and down. The supportive indicator at 1 bar bench moving average is completely flat, and I can see that the prices are breaking the trend range. Now, according to rules, most breakouts of trend ranges will fail at least temporarily, but it doesn't mean I can sell this breakout just yet. Why? Well, because there's uptrend working higher. I want to stay on the right side of the market, and I'm going to do that by following a trend line rule. Every move in price action is contained by a channel, so I can't really sell just yet. There's a break new extreme, and this is indicating the bullish momentum played out, and the breakout may now fail. Okay, the breakout is failing, and now it's going to be important what this area is gonna do, because if the EMA is not gonna hold and price action is gonna continue working lower, this is telling you that the structure is more bearish, and you would be expecting a failed second entry long bullish trap. But we can see this is not happening, and this area is holding, indicating a lot of strong bullish momentum. So EMA held, the resistance is now acting as a support. So once you see this, this is acting as a breakout pullback, and already you're thinking and you're taking into consideration possible bullish bias. But it was just a first entry long. I cannot go long. Uptrend played out with the break new high, so I have to be patient. There is no real setup for me to take. And notice what is happening. This is important information provided to us from the market. I can see that we broke above the trend range. Breakout failed temporarily. And right now we have two broad legs down. Visual two-legged pullback. Here you can see that the resistance is right now acting as a support again. The sellers are failing to push back into trend range. We have massive push above EMA, and this is confirming that the breakout area is holding as a support. Buyers are stepping into the market. And what am I expecting? I'm expecting a failed second attempt to sell, because we have a new low, first entry short, pullback. If there's going to be a second entry short failure above EMA, that's going to be a good setup, because we have two broad legs down. The breakout area is holding, indicating bullish momentum. But notice price action keeps working lower. And at this point, it's getting quite confusing. If I want to take a failed second entry short, I want to see EMA holding. And EMA is not holding, so we have a failed second entry short here. But horrible signal bar, we're below key level, we're below EMA. I can't really take it just yet. We even have high low, but EMA flattened. We entered a congestion. This is no trade zone. Too much indecision. Our analysis was correct, but unfortunately there was no way for us to enter. But hopefully it makes sense why you're expecting bullish momentum here. You can see how we are struggling to break below this important key level. Broad two legs down, and push above EMA is confirming the bullish momentum. I can actually reset the count here again, because I have so many matching lows. I have sort of like an unclear area of indecision. So I can use this low to count as a first attempt to sell pullback, another failed second entry short. But notice there was no trigger for this entry. There was no break above this bar high, which is important. This means the setup technically didn't trigger. Had there been a trigger, you could have considered going long here, because EMA is holding once, twice, confirming bullish momentum, and the sellers are going to get trapped. But didn't trigger, so definitely more aggressive. Okay, price action keeps working higher, and so far the structure is not that easy to read. And as a price action trader, you want to make sure you identify the context correctly. You identify the key entry point. You're confident the key entry point is confirmed, and you're only taking a high probability setup. Remember, you cannot just take a setup anywhere on the chart. Okay, you can make a case for anything. You want to take a high probability setup that will form only under specific conditions. This short-term channel has a break new high. You have a first entry long. If there's going to be second entry long, can I go long? I cannot really go long. This uptrend has a break new high. It still feels quite range-like, even though there is bullish bias. It's too far up, too close to these highs. Now I can look for possible wider channel, something like this. Is this channel correct? Not really. I'm gonna zoom back, reevaluate the structure. I can see there is so much empty room here. Only one confirmation here, and price action is only hugging the bottom trend line. Once you see this, this is not a correct channel to use. This is just a spike, broad pullback, another spike. Once you see so much empty room here, the better alternative is to expect spike in a channel. But at this particular time, I can't really have proven spike in a channel just yet. There was no trigger regardless. There was no break above this bar high. But you can see indecision, EMA flattening, Very difficult to read the overall bias. We can identify some consolidation, but you know, there's no clear bias. Just don't force any setup, be patient. And this is helpful. Price action keeps working higher. And if you're going to zoom back and reevaluate the structure again, we cannot deny the fact we keep making higher lows and higher highs. The structure is still bullish. And right now, since I can see that this failed breakout generated quite a strong bullish push, I can look for a spike in a channel, and this time I can actually anchor it right here and confirm it. So I'm going to copy and put it at the top. You can see this is how a lot of times you're going to find a channel. Market geometry is a real thing, and you can use this series of lows working in geometric fashion to allow you to predict where the channel is going to be. So this looks like one spike brought to like a pullback consolidation, and now the channel is flattening. So this is how spike in a channel a lot of times is formed. You have a bullish bias. I have a new high, first entry long, pullback, second entry long. So you have two like a pullback, second entry long, and we're off the channel and we're off the support again. And it's such a small bar, so this is first decent high probability setup. It's confirming the channel, confirming the support, and downtrend played out with the break and a new extreme visual to like a pullback. When I was watching this, I was even ready to go long here on this high-low confirmation setup. Great signal bar confirming key entry point, the EMA, but it never triggered. There was no break above this bar high. It stalled with an inside bar. So unfortunately, the setup never triggered, which was actually good because this stopped us from having a losing trade. So actually it was quite a good thing that the setup never triggered. EMA flattening, too much indecision, and price action keeps working higher, So at this point, I need to make a decision. Okay, after break new extreme, what is supposed to happen according to trendline rule? Most likely correction or reversal. The fact we're not even correcting, let alone reversing, is telling me, okay, I can probably widen the channel just a little bit, and I can confirm it with the 10,000 tick chart. You can use 10,000 tick chart to confirm overall bias, and your key entry point and a spike in a channel there was still in play. So I can see that 10,000 tick chart has a spike in a channel still in play, and I can just widen it a little bit, and price action keeps working higher. So this is confirming, okay, the channel is most likely wider. New high, first entry long. What is the price action trade expecting? Second entry long. New high again. I have to reset the count. This high is higher than this. So bias is bullish. Any way for me to go long is to wait for two-legged pullback at the key entry point. I cannot just buy randomly because I don't know when it's going to reverse on me. You can see market is correcting. Also remember, keep drawing those short-term channels. It's not about just identifying the main channel. Your goal is also to time the entry correctly. And you're going to be timing it correctly if you follow the trendline rule. Okay, so this is why we also follow the trendline rule for the corrections to make sure we're letting the corrections play out. There's a lot of profit taking, a lot of counter trend traders. You want to give it room, let the correction phase play out. You can't take second entry long below EMA, horrible bar, so far away from key entry point. I can even widen the channel because it's getting nicely confirmed. Okay, channel is getting broken. What are you expecting? You're not particularly worried about this downtrend. No, all you're thinking about is this channel, this uptrend, getting new extreme. So you're thinking about push above EMA and a nice high probability setup, high low or for secondary short. Now we actually have high low here, but this high low is not really a conventional high probability setup because this downtrend could get a new low. You can see why the downtrend fits well. So I can only mark it more aggressive. You know, this is a good setup. You feel it's going to work higher. The gut feeling is telling you that because you're above EMA, you're back above the important key entry point. But there's a chance for why the downtrend you really want to see a failed second entry short trap. Which by the time you get a failed second entry short, you're so far from EMA. That's a horrible setup. That's a horrible placement because it can trap you. It can pull back to EMA. You have to take setups near the EMA. So price action is correcting, but I hope it makes sense what you're looking for. You're looking for letting the correction play out, buying low where all the smart traders are buying. We have a new high, first entry long, and notice we have a second entry long. So this right here is a two-legged pullback, second entry long. Small support is forming. You're back at the main key entry point, and also the downtrend played out with the break new extreme. So this is a great high probability setup. I actually do this setup myself. Look at the great signal bar off the key entry point. The only negative is that you're below EMA, which is a little bit concerning. But in channels, when you're near the key entry point, you can definitely take setup below EMA, especially once you have a breaking low and 2 broad legs down. And notice what happened. It stopped you out just by 1 tick and then continue working higher. So this can happen. You cannot really do anything about this because we identify the context, key entry point is a good setup, and you can't really predict that 1 little tick fake out. Nothing you can do about this. So don't even be frustrated about this. Don't try to overthink it. Don't try to blame yourself or anything. Just this can happen, 1 little tick fake out and then it rockets higher. This is just part of trading and something you need to accept. Sometimes you will get lucky and you will survive the trade by 1 tick, not hitting your stop loss. And sometimes it will take you out just by 1 little tick. It all evens out in the long run. I don't think you can re-enter here actually because it's not really a high probability setup. Had it pushed above EMA, it would have been double trap. But it's kind of in the middle of no man's land, like no real setup, just third entry long. But here's the beauty. Push above EMA, EMA keeps holding, trend line keeps holding, high-low confirmation setup of visual 2-leg pullback. Great signal bar, and this is the textbook setup that you can pile on because it doesn't get any easier than this. Confirmation setup, the ultimate confirmation. Remember, the uptrend still needs to get new high, and look at the beautiful runner. And this is a perfect example why you cannot overthink losing trades and why you cannot take losing trades personally. Losing trades are part of trading. Every trader experiencing losing trades. You cannot trade without having losing trades. You don't have a crystal ball that can tell you exactly what's going to happen. You need to follow the rules, you need to follow the plan, and eventually over the long run, you will have an edge and you will have higher win rate, and this will generate consistency over the long run. And you can see here, you can literally make it back just within a 10 minutes. Just several bars later, there's a great high probability setup allowing you to make all the money back and then some. This was already a small stop loss, so no big deal, but it just goes to show that you cannot get frustrated, you cannot revenge trade. After losing trade, take a small break, 5 minutes, 10 minutes, walk around the office, don't even look at the chart, just cool off a little bit so you can come back, observe the market clear. You are ready to take the setup because what can happen a lot, traders, they will take a losing trade and they will be mad that it's a setback. They will be mad that the journey is going to take even longer. They will take it personally. They will not be able to execute on the next setup. While if they skip this setup, for example, or they accept the losing trade, they would have definitely re-entered here. So there is no point in being frustrated about losing trades. Just accept it, take a small break, and you need to be able to follow the rules and execute on the next one. Because traders, a lot of times, their mind will prevent them to entering here because they are still affected by this losing trade and they are not really thinking straight. So once that happens, you really need to work on your mental aspect because this is a great setup to re-enter, great high-low. Okay, you have a second entry long here, but the uptrend just at a new high, not fully at the EMA, not the best setup. And market keeps working higher. I have to make another analysis. How come after new high, the price action is not reversing lower? We're back above EMA. This means, okay, the channel is probably wider. And I can widen it just a little bit and still keep the overall structure of the market same. So this is telling you that you can actually widen the channel safely. You can see I can get confirmation here and here. And this is right now confirming, okay, bullish channel keeps continuing. Structure is still bullish. So is anything changing? Not really. I'm looking for high probability setup to go long. We have a new high. First entry long. Pullback, second entry long. Right at the EMA. Great bullish bar. And this is a second entry long high probability setup. This was hard to enter because my limit order didn't get filled and never came back. So you had to be really quick. But this is a great high probability setup. Second entry long at the EMA. Market keeps working higher. We actually have overshoot. Which overshoot is overbought territory, unnatural activity, and you expect stronger pullback. Price action is correcting. So once you're watching this, you're pretty much pausing, looking to go long, because this is such a depletion. You can break the channel or possibly reverse. So you're pausing your longs. And this is interesting. You actually have a new low, first entry short, second entry short. Now this is more advanced. I can definitely see a case that bears would take this setup because you're combining the overshoot with a bullish trap, because a lot of people must have gotten trapped going long here, not paying attention to the overall market structure, but you're using the channel that can help you to tell everything you need to know about price action. So this is not a horrible setup, but it's definitely more aggressive. I'm going to make the channel wider. Why? Because after overshoot, you should expect stronger correction. So we have wider channel. We have a new low for central second entry short, and we even have high low confirmation setup of the second entry short. So I can mark it as well. But at this point, it's getting very late and you already want to wrap up your trading. But you can see wider downtrend is new low, great lower high, confirmation second entry short. Market is breaking the channel and we are reversing. This is the overall market structure, and you can see how price action rules can pretty much explain everything that happens in the market. By you following this channel, you can see push phase, correction phase, push phase, correction phase. You know that you are looking to buy low where the correction phase is ending. Overshoot is explaining why suddenly there's such a strong sell-off at the end of the day, overbought territory, and you can see your goal is just let the correction play out, buy low, don't worry about losing trades. We already explained it. You need to be able to keep the composure so your mind allows you to follow the rules and keep taking good setups. You need to be able to re-enter and take good setups. You cannot be stuck thinking about the losing trade. And this was quite a difficult area. This was very difficult because it took a long time for this uptrend to develop. You can see just consolidation here, consolidation here. Remember, when the market is not clear, you don't have to look for setups. You have to be patient, and eventually you're rewarded after, because after this area pretty much it got cleared, the uptrend got confirmed, and it's pretty much easy pickings. Here was quite confusing, no real setup, and your goal as a price action trader is just not make a stupid error, have a losing trade because you're too impatient. So I hope why it is clear what market did here. Breakout area, resistance holding as a support, and the rest we already talked about. So I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time. Good luck, everybody.